The latest reports show inflation is stubbornly sticking around. The Consumer Price Index shows prices were up 6% last month compared to a year ago, and that could prompt the Federal Reserve to once again raise interest rates. This afternoon, our financial expert Paul Hood is here to explain what this prolonged period of high inflation means for you. Paul, great to see you.
Good to see you.
Seems like this has been in headlines for about a year now.
It has. It has.
Unfortunate, but can you break down what the Consumer Price Index is and how it helps economists understand what's going on with the economy right now?
So probably the third grade level to explain it is you go into a store that has most every product and services and you fill up your shopping cart. That's kind of the Consumer Price Index. It's the things that a household will use, just all put into what the prices are today versus they were a year ago. Services, some services are put in there. So it's really just, it's really what it costs people to live.
Nice. And how do economists measure inflation? Through that?
Well, yeah, so inflation comes is driven by two things. One is supply and demand, and one is government spending. So typically supply and demand is okay, but we went through a period to where supply was down because the government shut the economy down, nobody was producing anything, and so there was less things for people to buy and people had money to buy it. And so it's just supply and demand. If there's one car that 5 people want to buy, then it drives the price up. So that's one driver of inflation. The other one is the government just spending money, printing money. It devalues our dollar because there's more dollars out there, again, supply and demand in the monetary system. And so the expectation is for that to kind of level off and start slowing down a little bit because people are back to work and things are catching up.
And the thing that probably the average American notices most is grocery prices. It's something that we all have to buy. You know, it's been a prolonged period now with higher grocery prices. How can the average American maybe save some money or plan out what to do since it's so expensive now to go to the grocery store?
Well, you know, one thing is, and I'm a big proponent of eating out and all of that, but a lot of times you kind of watch that because not only do those restaurants have to buy the product, but then they have to mark it up to make a profit. You know, look for deals. Grocery stores, Walmart, all of them, they typically have loss leaders. Try to plan your shopping around what they have on sale. Go with a list, because a lot of times if you don't go with a list, you end up with stuff when you get home, oh, I don't know how I got this, and you forget half of the things on your list.
And don't go hungry either.
That's a bad thing.
You know, when I go to the grocery store and I'm hungry, I spend $30 more.
Yeah, well, especially the ones that have the bakery and the, you know, you go to Reese's and they got that yummy chicken noodle soup, and
I know.
Yeah, don't go there.
So tempting.
That's good stuff.
Finally, what's it going to take for this period of inflation to end and prices to go back down? What's it going to take?
Well, the reason the government tries to raise interest rates is because they want to slow demand so that supply can catch back up. Because if supply was more than demand, then the prices will come down, just like if we have 10 cars and there's only one person buying it. So the government tries to slow things down. So I think it's going to naturally catch back up or slow down as supply catches up, unless our government decides they want to send money all over the world and print money and all of that. So I think it's going to be a slow recovery. People just need to tighten their belts and be intentional and prudent.
All right, hang on.
That's right.
Paul, thanks so much. We appreciate it.